morning and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. Now today we're going to just start by looking at equity markets. Yesterday, US equity markets and European stocks were both in positive territory. Here in the UK we saw modest declines, and overnight in China we saw continued weakness. In terms of the US, we saw a reversal throughout the day. Nothing really behind the moves, no real change in narrative. Markets continue to digest the prospect of higher interest rates, given the evidence on the US economy continues to show that it's very resilient and is growing well. In terms of data, yesterday we had US initial jobless claims, which we can see here on the chart, came in at 192,000. This is really looking at how many workers last week are claiming that they are unemployed and require benefits going forward. So it's a leading indicator and gives us a sense of the health of the employment market in the US. What we see is that the labour market continues to be very resilient. The figure here at 192,000 is at a 4-week low and much lower than what we saw in 2020. Very good news for the US economy, should help see consumption continue to grow and be a positive contributor to GDP. But the challenges for the US central bank is that they're trying to get inflation down. They've been putting up interest rates aggressively, and in order to cool the economy, they expect the US labour market to start to weaken. That's not evident yet, so it's still a challenge for the US central bank there. In terms of data today, we'll get more inflation data from the US. We'll get what is known as the PCE inflation data, which is the Federal Reserve's most favoured measure of inflation. Markets' expectations is for inflation to fall further from 5% down to 4.9%, and when we strip out the more volatile components of energy and food, we're expecting it to fall from 4.4% to 4.3%. Still above their targets of 2%, but any reading below the expectations should be a positive for both equities and bonds. So we'll keep you up to date and inform you on Monday. And here in the UK, we heard from Bank of England member Catherine Mann. She is one of the more hawkish, or one of the members that are more in favour of putting up interest rates more aggressively. She has talked about the financial conditions in the UK being too loose, and therefore going forward, the Bank of England should put up interest rates again in order to ensure that inflation comes down, but also stays down at a sustainable level. That's everything from us today. Thank you for listening, and we'll see you next week.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.